After a couple weeks of evidence that the bulls are starting to step into this market, that same analysis needs to be put into evaluation when the market does start to move, especially above the T-line, and they sell it off hard and fast. Notice where they bottomed it, right at the same recent lows. This provides an excellent opportunity to go to your short-term charts to see whether this is actually a true sell-off or if this is the last gasp bulls or bears trying to take control. Note how going to the 10-minute chart showed when the downtrend stopped and when the bullish trend started, especially in the last hour of trading where they took it up hard and fast and used the T-line as support. This gives you the prospect of this happening was better provided by knowing that they had done a double bottom on the Dow and that they might be doing a hammer signal like they did today. The NASDAQ gave earlier evidence where it gapped open to the downside and then after trading off for a few minutes started coming back up through the open, which now provides a green candle. That provides evidence very early in the day that the bulls are starting to come in. You wouldn't see that on a bar chart. This is more of criteria for using candlestick signals, is that once you saw that candle turn green, that told you from where they opened it there was bulls coming into the market. And because the signals are usually the evidence of a bullish or bearish force coming into a trade, when we recommended MOBI, it was based upon positive trading. Well, as we saw, the market started off down 200 points this morning. However, this one continued to show strength early in the day. So it was just following through on the signal that it created, plus breaking out through the T-line. This became a very good trade because that immediately shows you relative strength, that you're seeing a green candle on a big red candle market day. Also for commodity traders, we had that simple methods rising or methods falling pattern that occurred in the corn chart. Strong downtrend, broke through the T-line. Then we had indecisive trading days where they could not close it more than halfway up this candle and then started selling it off again. Shortened right in this range, which would have been about a bearish engulfing signal after a little or a shooting star signal. And then it got all the way down below the 200-day moving average today, making a very, very profitable trade. When was it time to come out of this trade? Once again, going back to the 10-minute chart, we had a bullish engulfing signal forming a good distance away from the T-line. That was time to start taking profits on the downside, anticipating at least they were going to come back up and test the T-line. But as you can see, they tick it up from there all day long. So if you closed out your position here, you had a good 2-day profit on a short trade. These are just some simple little factors that you can learn that would dramatically improve your investment results just based upon what normally occurs in investor sentiment and how to use them with confirming indicators. That'll be it. We'll see you in the chat rooms.